Hey guys, Steve Washington here, and wanted to touch base with you guys today, kind of continuing on the video from yesterday where we discussed creative financing and discussed just some of the ways that investors are actively using that in their business and how you can as well. So, another form of creative financing is actually buying a property, what we call subject to. And what that means is you're purchasing the property subject to the existing financing or the existing debt. So think about it this way. You have Mike, the homeowner. He owns 123 Main Street. He owes $100,000 on a mortgage. And Michael decides he's done with his property. He wants to sell it. He needs it out of his life. And Michael's paying a mortgage payment of, let's say, $1,000 a month. And let's say that property can rent in that area for $1,600 a month. So we're able to purchase that property subject to, meaning, and this is the part where it trips a lot of people up. So when a property is sold, the deed, there's two main instruments. You have the deed, and then you have the mortgage itself, or deed of trust, depending on what state you're in. But you have the deed and you have the mortgage. And so what that means is you can transfer a property from Michael, the homeowner, into someone else's name, but the mortgage not disappear. So in most cases, everybody expects that the mortgage is paid off at the time of sale. And that is traditionally what does happen. But that's not what has to happen. The mortgage can technically still stay in place. Those are two separate documents. So you have the mortgage, and then you have the deed itself. So purchasing a property subject to means to take title to the property or take deed or ownership of the property, but the underlying debt still stays in place in the old owner's name. Does that make sense? And so that's what purchasing a property subject to is in a nutshell. It's just that. It's a way that investors have been purchasing properties like this for years. I've purchased tons of properties this way. Not to go like 2.0 on you guys, but you can take a subject to anything. So there's been times we've purchased properties where there were back taxes owed. So we had the property deeded to us and we kept the taxes that were still owed on the property. And then, as now the property owner, we can go to the county government office and a lot of times work out a payment arrangement to pay off those taxes. We've taken it subject to like IRS liens. We've taken it subject to like huge municipal bills, like water bills, sewer bills. We've taken it subject to judgments. So meaning somebody gets sued for their property. Or I'm sorry, they get sued for whatever reason and they get a judgment filed against them because they lost the case. And that now goes against their property. So we've taken it subject to all of that. So now the key is you do have to have a strategy or have to have a plan of what you're going to do with that property to make it all make sense, right? But at the end of the day, I probably should have stayed on track. Let's just go back to the mortgage itself, which is probably the easiest one, is to buy a property. You have the capacity when you have a motivated seller, in some cases, to purchase a property. Deed gets put in your name and the mortgage continues to stay in the old person's name. And now you just step in and begin making those mortgage payments just as normal. And I think my longest property that I owned where the deed was in my name or in my company's name and the mortgage was in the still remain in the previous owner's name was about 10, 11 years. So a mortgage company accepted all, I guess 11 years times 12 payments. I don't know what the math is, but it's over 100 payments of that. No problem, no issues. And so that creates a tremendous opportunity, right? Just recently, I think that was about a year and a half ago, I know that we purchased two properties this way and we didn't have to put anything down. So think about that for a second. Essentially, somebody threw me the keys and the deed to the property. They're like, look, I just want to be done with this property. I don't want to deal with it at all. Yes, I do have a mortgage on it. And look, I don't care what you do. And we made it very clear to them, like, hey, this is the only way that we're going to be able to purchase this property. It wasn't, the property didn't have a huge amount of equity in the property, but it was still some. I'm a decent amount at that. But the person just wanted to be done. And they had like a super low interest rate, maybe like, I think 3.5% on one. The other one was a little higher, maybe about 5.5%. But even still, that's still historically a very low interest rate. And yeah, we didn't have to put a dime out of pocket. They were all caught up on their payments, the whole nine. They just deeded it over to us. So that just creates a tremendous opportunity. I've thought about this a lot, like for people who forget investors. Love my investor community, but I come from my mother rented. We rented for first first 22 years of my life. We didn't own a home. If we would have known about this, oh my gosh, well, of course we would have either done from yesterday, the strategy that we talked about buying it with owner financing. Oh, we were taking a property subject to without question, but we didn't know it existed. So it's a tremendous opportunity both for the investor, if you want to buy it, keep it as a rental, do an Airbnb, do a group home, do I don't know, sky's the limit, right? Flip it. So it's opportunity there. It's also opportunity just for the homeowner who's like, look, I just want a house. Maybe I don't have good enough credit. Maybe I don't have a big enough down payment. Maybe I whatever. Tremendous opportunity out there, and it's happening every single day in every single county, all across the U.S. So it's your opportunity to jump in on it or not. Now, there is one disclaimer that happens with this. And so when you purchase a property subject to, in almost all mortgages, there is a clause in the mortgage, and it's called the due on sale clause. And so what that clause says is that the mortgage company has the right, not the obligation, that's the key word, but the right to call the loan due or to accelerate all payments upon a change in title. So in other words, what the mortgage company is saying is if you sell this property, Mr. Borrower, Mr. Mike, our original person, if you sell this property without paying us off, we have the right to say, you know what, we want all of our money immediately, right? And all mortgages, almost all mortgages have that. And so therein lies the risk of it. And so you might be saying, okay, well, Stephen, why are you even telling me about this if they're just going to call the loans due? And I'm here to tell you is that historically, that's just not been the case. Again, I told you guys about one loan that we had for 11 years. I won't name the bank, but they were a very big bank. And if I said the name, everybody knows it. You know what I mean? And for 11 years straight, received every last one of our payments. Other properties that we've purchased, big banks, I'll tell you, the smaller banks, if there has been any issue, they tend to be with like the super small banks where it's like maybe one, two, three branches sort of thing. But even those, there's still workarounds. But that is the risk that comes with it. We talked about this in one of the other videos that you can't really have any sort of success in much of anything without some level of risk. So that is a risk factor. However, we also talked about being creative in one of those videos as well. And so you have to say, okay, well, how could I get creative? In the event that they were to call the loan due, like it's not an overnight process. Like they can't just say foreclose on you tomorrow. Worst case scenario is you could technically deed the property back to the previous owner. Maybe you can work out some sort of a deal. Maybe you can work out some sort of an arrangement. Maybe you can refinance the property. Maybe you could sell the property. In the event that these things happen, the foreclosure process, and I hate to even go down this road, but I just want to, in case somebody's getting super concerned, it's not an overnight process. Even in like some of the fastest states like Texas, where foreclosures are relatively quick, I think it's probably still at least a minimum like 75 days, something like that. Don't quote me. But in some states like New Jersey, it can be 2 years, and New York, it can be even longer, and things like that. So you guys kind of get the concept. So there is a risk in that, but I'll say it this way: the investor community is overwhelmingly not concerned about that. I know personally, know investors who have purchased in excess of 100 properties this way, never had a single loan called due. And the times that we generally have heard about them being called is when payments not being made. So, you can't take over somebody else's mortgage and then not make the payment. You got to make the payment 100%. Like we say you're messing up the game for everybody, right? It's like, look, make the payment. You don't want to mess up this person's credit. That's primary. Like they're relying on you, expecting you to make this payment. So you have to make the payment, and it won't. That way, it doesn't bother their credit, and it also doesn't create an issue with the bank. So the payments have to be made on time, and the insurance generally has to be configured in a certain way as well. And generally speaking, when those two things are in line, the banks could care less. I mean, think about it this way, right? Imagine somebody owes you money, right? Somebody owes you, I don't know, $3,000, and they're paying it back to you $100 a month, and they're paying it faithfully paying it. And then you used to have it, get it from, Mike, then all of a sudden somebody else is paying you. Reality of, at least for me, as long as that $100 coming in, I don't care who's paying me or whatever. Just make the payment, and that's generally the position that the banks take. So that's that. So that's the disclaimer. Now the next question, and I'm gonna wrap up two more points. Like, who would do this? We're still going back to the same thing: is these motivated sellers? It has to be somebody that has a situation that outweighs them going a traditional route. You have to find somebody who's looking for speed and convenience. I'll tell you some of the most probably eager property owners to do something like this are people who are actively in foreclosure and they don't have a way out. If they have a way out, they should take it 100%. And this isn't just like say the right thing talk. Like, no, it's just the way it works, right? So if they have a better option, they should take the better option. But if they don't have a better option, then they should consider our option. And so a lot of properties that we have purchased subject to have been from property owners who are actively losing a property to the bank. A lot of times they've already moved out, or maybe it was already a rental property. It's just sitting there. It's rotting away. Grass is growing up all crazy out front. You've driven past these properties. You just didn't maybe put two and two together. And we come in and we say, hey, we'll buy it. We'll take it off your hands. Sometime you could take it off their hands and not have to give them anything. Sometimes you have to make up back payments. It's different things that have to be done. It's certain paperwork that goes into play in this. The point of this channel, right, is really just to expose everybody to opportunities that exist. Now, digging into it and figuring it out, that's going to be on you. Everybody's got to put in the work, right? But yeah, these opportunities exist. And I know of people who've purchased like properties in your basic blue collar, nothing special type neighborhoods to like high end $800,000 properties in the middle of class A neighborhoods subject to. Like it's a crazy little opportunity. Subject to tends to work best when the market is either flat, meaning prices aren't really going up, or especially when like prices are kind of slumping down. When it's harder to sell properties, oh my gosh, that's when subject to explodes of the opportunity, because now we become more valuable. We talked about this in other videos. If you want to increase your income, you have to become more valuable. We become more valuable when we have solutions to people's problems. And when again, real estate prices start going down, the market starts cooling off. That's when the subject to opportunities really start heating up, because people have a much harder time selling their property. I'll tell you, when properties like right around COVID and things like that were just flying off the shelf, yeah, it was less people probably open to doing that, and rightfully so. Again, listen, if you have a better solution, you should take it. But listen, when that market cools off, it'll be a field day for sure. It'll be a tremendous amount of opportunities. And so, yeah, I think that's that. Listen, I probably left something out. I don't know. Like, subscribe, share this. If you know somebody who needs to buy a property, wants to buy a property, maybe they don't have a big down payment, maybe they don't have credit, share this video with them. Like, all I'm trying to do is enlighten the community. Was thinking about my first mentor, because trying to think, like, man, I feel like I'm pretty passionate about this channel. It's not about like, oh, I'm trying to become the next guru or something like that. And I really had to think about it, like, why is this kind of so passionate to me? One, I know what it's like to come from a background of just, I didn't have the connections, I didn't have the relationships. Like, I grew up in like terrible neighborhoods, you know what I mean? Like the whole nine. Like, we went to bed to, hearing gunshots either in a close distance or like super, not that far away. And these weren't people hunting, or at least not for animals. I'll leave it at that. Um, and I had multiple mentors help me over the years. There's one mentor in particular. I think I want to dedicate an entire segment to tell her story. She's since unfortunately went to be with the Lord, but I want to honor her and tell her story on one of these segments. And I've had so many people help me over the years, and this is what I love to talk about. I love talking about this stuff anyway. So I'm not going to make this video 50 minutes, but that's the goal. That's the intent. So if you see value here, I need you to share with people. I need you to like. I need you to subscribe, because it'll motivate me to keep doing these videos. If I feel like I'm just doing it to the air, then I'll just be like, all right, it's not worth it. Nobody is even listening. So, am I begging a little bit or whatever? But not really. I'm saying, like, listen, let's make this a movement together. Let's figure this out together. Let's grow together. So appreciate you guys. Definitely have a great rest of your day, and look forward to seeing you on the next video.